Good morning and welcome to today's pre-market report. Now in today's pre-market video, we'll take a look at the Nifty. I'll take a look at what option buyers can do and what option sellers can do. Before we do that, let's take a quick look at the news. Now on the news front, the first news is GST collections. The GST collection data has grown by 7.3% on a year-on-year basis to 1.72 lakh crore in December, according to the latest data released by the government. Then the other news is relating to the turnovers in the stock market, whether it's equity, whether it's index, whether it's futures. And the turnover in stock futures, index options, and stock options has declined for 3 months in a row. Now, I believe that's only going to get worse in January because the lot sizes have increased. Anyone who is actively trading knows that now basically, since it has the lot size, the quantity inside each lot has increased, that will push out a lot of the option buyers who are trading a smaller quantity. So, and even the ones who are trading a bigger quantity, let's say, due to lower volume and everything, they'll think much more before entering a trade rather than just pushing the entry button. And plus the cost of entry also, brokerage and everything has increased. So all that will, I believe, drive volumes lower even in January. So I expect by the end of January it will be the 4th month of consecutive decline. Then also, while recording this video at this time, some of the auto sales data is out, not all of it. And so far what I can see, the only company which has done well in December sales is Maruti. The rest of the sales are pretty flat or slightly down, but the only one which so far I've seen seems to be doing well in terms of sales in DEC is Maruti Suzuki, but I would say primarily due to the lower segments. So that's it on the news front. Now let's take a look at the Nifty. Now today's Nifty chart has a lot of levels. This is as the Nifty is trading in, if you zoom in, is trading in two box ranges. First box range is the small one between 23,820 and 23,920, while second box range is 23,980 to 23,750. Now according to me, as long as the Nifty is between 23,980 and 23,750, keep expecting dual-way moves. But I expect today's trading session to be a bit tougher than the previous 3 or 4 trading sessions. The previous 3 or 4 trading sessions have been very easy, and I could chalk that up to number one, less FII participation, and so I said the lower volume. A lot of the smaller traders who are taking jumpy decisions have been pushed out. So the moves from cleanup. But today, why I expect a bit more of market noise is simply due to the resistance zone we have reached. And if the index tries to break above it, then it's going to create a lot of wobbling about. Now, what is my option buying trading plan? As long as it's between 23,980 and 23,750, any option buy, I'm not going to, let's say, buy and this thing is going to keep zooming up. Nope. I expect within this zone to get a V-shaped move. Only if we break 23,980 or 23,750, then we'll get a one direction move that can be very easy to trade. Within this zone, it will be in, out, rather than clean. Now, if we break 23,980, then 24,080 and 24,160, easy targets. By chance, we break 24,160, 24,280. On the other hand, if we break 23,750, then 23,680 and 23,600 are the next key ones. If we break 23,600, then 23,480. Now, why am I not stressing on 23,920 and 23,820? These are the smaller range levels. So I think this is mainly for the guys who are doing scalping. Let's say this support and resistance for guys trading in 2-minute, 3-minute charts. And this bigger one of 23,980 and 23,750 are guys trading in, let's say, 5 to 15-minute charts. That's how I look at it. Now, coming to the option selling trading plan. For option selling, according to me, if you're an aggressive option seller, then you can sell calls above 23,980 and puts below 23,750. If you're cautious, then 24,080 and above, and P's of 23,680 and below. Now, how am I going to play it? Now, I'm going to play it depending aggressive or cautious, depending on 2 factors. Number one, how we open. If I see at open, we open at roughly the same range, and the first 5 minutes we are still just trying to break above this but not really getting anywhere, then I will do an aggressive option sell. If we open roughly, let's say, somewhere down here, then I will end up doing a cautious option sell. So that is what's really going to make me decide, because if we open somewhere down here, then we're going to get much more volatility. If you open somewhere here, then there'll be volatility but less than expected. And option buyers, volatility is your friend. Option sellers, volatility is your enemy. So as I said, that I'll decide cautious or aggressive depending on that. Now, like I've been doing the past few videos, I'm going to enter calls and puts at the same time, because the market is right now range bound and it doesn't have a clear direction. So I'll let the first, let's say 15-20 minutes pass, and then I'll enter the calls and puts consecutively across the day. And as I enter, keep adjusting the stop so as to ensure that if by chance the trade was to try to go against me, then that side gets stopped out. It'll be a profit stop naturally, because expiry you enter profit pretty quickly. It gets stopped out and the other side keeps riding on. So that's my trading plan for today. If you liked it, then hit that like button on the video and subscribe to the channel, and also click the notification bell. Any questions or any suggestions or any stocks you want covered, drop them in the comment section below. If there is something valid in them, then it will be applied or it will be covered. Thank you for watching.